Here's my macro Bitcoin forecast. It's 21 years. Goes out to the year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index. And at that rate, Bitcoin's $13 million a coin in the year 2045. 13 million. It could be a 3 million bear case. It could be a 49 million bull case. But what is Bitcoin? 7% of the world's assets then.
MicroStrategy founder and executive chairman Michael Saylor has delivered another super bullish price prediction for Bitcoin, the world's largest cryptocurrency by market cap. While speaking before thousands of attendees at the Bitcoin 2024 conference in Nashville on Friday, Saylor gave his macro Bitcoin forecast for 2045, giving a bear case, a base case, and a bull case for the leading cryptocurrency. In 21 years, Saylor expects Bitcoin's price to appreciate by at least 4,300% from its current price of $68,000 to $3 million per coin. That's the bear case. Saylor's base case for Bitcoin is that it hits $13 million by 2045, a 19,000% price explosion from current prices. This will put Bitcoin's market cap at $280 trillion, a 280x increase from the current $1.3 trillion market cap. With Saylor's predictions, Bitcoin will easily be able to surpass the market capitalization of some other asset classes, including gold and art. According to the renowned business executive and entrepreneur, the global economy struggles because we are relying upon imperfect assets and imperfect systems to store capital. Saylor began his speech by discussing the useful life of various asset classes, including equities, collectibles like Ferraris, real estate, and government bonds. He gives various examples of physical assets that have failed the test of time through the years. He cites the example of King Ranch, one of the oldest ranches in the US with about 171 years of history, explaining that tens of thousands of other ranches were founded in the same period, or even before that, are nowhere to be found today. Entropy is diluting the value of their physical assets, Saylor explained, adding that war, famine, and catastrophe are other factors that devastate the values of physical stores of value over time. However, all of these issues are inconsequential when investing in Bitcoin. According to Saylor, Bitcoin held with a custodian could have a useful life of up to 1,000 years, and Bitcoin that is self-custodied could have a useful life of 10,000 years. This is why Saylor continues to maintain his super bullish outlook on the leading cryptocurrency, which he predicts could someday climb as high as $49 million per coin. As we bring you clips from Michael Saylor's powerful presentation at the conference, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thank you, and enjoy the video.
Bitcoin's immortal, immutable, and immaterial capital. And I use that in this sense. It's got an infinite lifespan. It's not being attacked by the forces of weather and entropy and inflation. It's immaterial in the sense that it's not in the physical world. It's not suffering from all of those parade of horribles that are the scourge of financial and physical assets. And it is the solution to our economic dilemma. The transformation of our capital from financial and physical assets to digital assets, it solves the problem that we're all facing. Now, how long-lived is Bitcoin? Well, take your Bitcoin and put it at scale with a custodian, an institutional-grade custodian. You pay 10 basis points. By the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move the Bitcoin every year or every decade, and you can stay one step ahead of the custodians failing. You can't teleport a building. You can't teleport the King Ranch, and so Bitcoin is that thing that you can move. Say you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset. And what happens if you give it to the AI? Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. The AIs are going to want the Bitcoin. If they have a choice between owning the Bitcoin and owning the ranch in Texas, or owning the bar of gold, or owning the Argentine peso, it's pretty obvious what they're going to want, and you can see here why they're going to want it. Digital assets are in a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale. Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of 1,000 to 100,000 years. It's a breakthrough in capital preservation, but it makes it a revolution in economics. If you would be rich, trade wisely. And here's a very simple principle. Trade temporary for permanent. Trade your ice cream cone that's melting for the peso for the dollar for the land, and the land for the Bitcoin. Trade the currency for capital. Trade something fragile for something resilient. Trade something local for something global. Trade something physical for something digital. Trade the security for the commodity. Trade the commodity for the scarcity. You can't go wrong moving in that direction. So let's talk about some great trades in history, some trillion-dollar trades. The Dutch understood naval power. They understood ships. They had thousands of them. They bought the best port in the New World for a couple of $100 in plastic and textile trinkets. And that's worth $2.5 trillion today. Okay? It was an investment that's returned 6% for 398 years straight. It's a 10.5 billion X return. And if you think about it, you're like, why would I actually give up the best port in America for a bunch of textiles and plastic and glass? But the people that sold the thing to them didn't understand naval power. If you don't appreciate the reason you're going to want the property, you won't value the property.
During his presentation, Saylor pointed out that there are $900 trillion of wealth stored in physical and financial assets across the globe. However, a very large percentage of these assets are based on 20th century ideas and 20th century technology, with only a tiny, hardly noticeable percentage stored in a 21st century technological innovation that represents true scarcity. At the moment, Bitcoin's 1.3 trillion market cap represents only 0.1% of the global financial market. By 2045, Saylor estimates it would have grown to 2% in the bear case, 7% in the base case, and 22% in the bull case. Saylor also differentiates between the $450 trillion in assets held for utility and the $450 trillion in long-term capital store of value, estimating how much it costs the world to hold these assets because of the constant devaluation of fiat currencies. Here are more clips from Saylor's presentation.
How much is digital capital worth? Take the $450 trillion, multiply by 3%. That's your entropy cost or your inflation cost. It costs the world $13.5 billion a year to take all of those parade of horribles when they're trying to preserve their wealth. If you put a 20 P to E on it, like you value a company or a long-duration bond, that's worth $270 trillion. So digital capital is worth 10, 20, 15 trillion a year, and it's worth hundreds of trillions of dollars. Reality check. Is he full of BS? Well, digital capital is returning 55% for the past 4 years. Financial capital, the best in the world, is the bond. It's minus 5%. Imagine capitalizing your company or your country on a minus 5% instead of a plus 55%. It's obviously working. And now let's come back to my chart here. Global wealth, we can look at it like this, and we see the little Bitcoin, square in the left corner. But what's happening? Here's my macro Bitcoin forecast. It's 21 years. Goes out to the year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index. And at that rate, Bitcoin's $13 million a coin in the year 2045. 13 million. It could be a 3 million bear case. It could be a 49 million bull case. But what is Bitcoin? 7% of the world's assets then. What about the rest of the assets? Well, I actually think that AIs and technology are going to revolutionize tech. We had no companies worth $1 trillion. Then we had a bunch of $1 trillion companies. You're going to see more because you're going to see companies with 100,000 AIs and no employees, and they're going to do the work of companies that used to have 100,000 employees. You're going to see mega corps develop, shipping robots and self-driving cars, and a company that gives a personal physician to 1 billion people without any doctors on the payroll. So clearly equity is going to grow fast. Gold's going to get demonetized. Land will be less monetized. But look, here's the future in 2045. Doesn't look that revolutionary. It looks like today. It's just that Bitcoin is visible on the chart to you. When Bitcoin is visible, that's going to be the base case. Now, what are the implications of this? How do you make money? Well, let's talk about individual Bitcoin strategy. What should you do? Make Bitcoin your primary treasury asset. Convert your excess earnings to Bitcoin. Utilize subsidized credit. If the government will loan you money, borrow the money at cheap rates and buy Bitcoin, and find a tax-efficient way to invest the Bitcoin. What shouldn't you do? Don't quit your day job. Don't lose your focus on Bitcoin. Don't use margin loans and trade with leverage. You get wiped out while you're asleep on a Saturday night. That's not good. Good? 30-year loan for 3% backed by the government on your land. Bad? Overnight 10x leverage.
In other news, Florida-based digital asset technology company Marathon Digital recently announced the purchase of $100 million of Bitcoin and the decision to adopt a full HODL strategy going forward. In a tweet put out on Thursday, the cryptocurrency mining firm said, "Today, we are announcing that Marathon has purchased $100 million worth of BTC, and effective immediately, we are once again adopting a full HODL strategy." In another statement, the Florida-based firm revealed it currently holds over 20,000 Bitcoin on its balance sheet, worth over $1.3 billion at current prices. According to the statement, Marathon also plans to keep all of the BTC that it mines as it adopts a full hold-on for dear life HODL approach towards its Bitcoin treasury policy. Fred Thiel, the firm's chairman and CEO, said the full HODL strategy reflects the company's confidence in the long-term value of Bitcoin. "We believe Bitcoin is the world's best treasury reserve asset and support the idea of sovereign wealth funds holding it," Thiel said, according to a press release. "We encourage governments and corporations to all hold Bitcoin as a reserve asset." Saylor has reacted to Marathon's news, urging Thiel to purchase even more Bitcoin for the mining company. Marathon is the latest in a string of companies in and out of the United States that are adopting a Bitcoin strategy to save their assets from fiat debasement. Saylor believes many other companies, including multi-trillion-dollar tech firms like Microsoft and Apple, will make similar announcements in the years ahead as Bitcoin becomes more widely accepted. Do you agree with Saylor's $13 million prediction for Bitcoin by 2045? Please share your thoughts in the comments section below. If you liked this video, don't forget to give it a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.